Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, October 1st, 2009. Well, the first day of the last quarter of the year got off to a bang to the downside today as the markets are selling very, very hard. Dow is down 155 right now, NASDAQ down 53, and S&P 500 down 21. Basically 2 to 2.5% across the board to the downside here as the markets are reeling after an ugly jobless claims number this morning, which again was worse than expected. But the real kicker was the ISM number this morning. The manufacturing number this morning really coming in poor, and that sold the markets extremely hard at 10 o'clock. 10 p.m., 10 a.m. Eastern time to the downside. Now, the key is this, guys. We've talked about master levels. What are the master levels? What are the cycle work? We had talked to our premium subscribers about knowing that a large cycle was intact here, and again, you're seeing that come to fruition beautifully today. If you were a premium member, you would have been on the perfect side of the short side of this market to capture this to the downside, along with the last couple days of downward moves, really starting about a plus week and a half ago, when we topped out at 108 on the SPY. Since then, we've dropped about 5 points all the way down to the mid to low 103s at the lows today. Again, you can see here the low of the day today right around that 103.40 level, and beautiful, beautiful selling. So the bottom line is, folks, downside here based off of some good negative economic news where reality is beginning to strike. And I talked to my premium subscribers as well. The key being is there's a major disconnect between the market, Wall Street, and Main Street. And we really delved into that in the premium research video and to our chat room subscribers, discussing how you really have to look at the disconnect going on here. You had the market and Bernanke and Obama pumping, saying everything is all right. And here we are with Main Street. Consumer sentiment really kicked it off early this week, showing a decline from last month in consumer sentiment. That's not what you should be seeing if the market is truly coming out of recession. So sure enough, the market's seeing some good downside, some good confirmation that now Wall Street is beginning to realize that Main Street may be a little more intact here and right on what the market is going to do and what the economy is doing. So again, a beautiful selling motion today. Look at the drop really from yesterday's peak high here after that really ugly drop early on yesterday. Monstrous reversal to a double top. Beautiful shorting opportunity. See the green line? The green line held beautifully. We consolidated in a bearish pattern, fell down into the close, and then popped just up. Then today, the small gap down, hard sell, sideways inside bar. Notice this. Downward move inside candle 1-2. That's a bearish pattern development. Know your price pattern and time. This is so important, folks. You can see the 1-2 inside bars. What happens off of that? Downward move. That's what that pattern told you. Know your patterns. Then what happens right here? We posted this on the blog today as well. This was a great call. It went out for free on the blog. Bearish pattern formation off of this big down move. See again, a big down candle, 1, 2, 3, 4, 5, 6 inside bars. On 7, down we go. And again, this is all stuff that we reveal how to figure out counts and cycle work. And again, that's going to be in our webinar this weekend. You can go sign up at In The Money Stocks under the education seminars and webinars link. But again, all this kind of stuff, it will blow your mind, the stuff we will reveal to you. And again, it's a 5-6 hour course, and we'll go 10 hours. You guys have questions and want to learn for 10 straight hours, we will take you through that. We will not leave till every one of you knows this stuff and is content and understands it. That's the bottom line. So come join that, folks, and we will educate you in the mysteries of the market and really understanding cycle work, price pattern, and time. Now, off of this down move, you had a little one candle bar pause and a little down move. Off of that, you had a nice upswing, but notice it goes right to this dotted line. This dotted line is at 104. Resistance was at 104. Once we broke 104 to the downside, it becomes resistance. We float right back up into it, sell hard off of that. Then we've had a little bounce right off of our next support line, which was right here. And by the way, every line you're viewing on the chart has been in there for days, weeks, months, literally. All right, that's how long these lines have been in there. That's why they're so key. That's why the cycle work works here and the trend line analysis works, is because these lines are so old. They've been tested time after time, and they've been true, and you can see how well they work. Right here, we get below the dotted line. Where's the pull? Up right to the dotted line, green line here again. Resistance, down we go. Where do we go? Right to this level here at the 103.50 level. What happens off of that? You bounce back to the 20 moving average. Now you're seeing a little selling pressure right off that 20. Know your price pattern and time. Volume today, extremely heavy. Beautiful volume. We go from a day on Monday of 118 million trade on the SPY, lightest trading day of the year. Today, we've already done 173 to 175 million. Blowing that out, and again, we still have 2 hours plus left in the day here before the end of the day. So you're looking at a day probably of 250, maybe more volume in this market, blowing out 118 million by more than double, close to triple today, I would say, in total of that volume. That's key because we've also highlighted to our premium guys, along with tons of posts on the hot charts and alerts, the Pro Trader watch list, daily market report, the nightly videos of 40 minutes in length. All that's included, obviously, in the research center. But we highlighted to them how you had to look at the volume indicators here. Now, what are the volume indicators? The volume indicators basically were dictating that whenever you'd have volume in the market would come down. Even intraday, if you had a volume candle that was more than a million on the SPY, it generally was a red candle. That's telling you that on light volume they're floating up. You have little amateur buyers propping the market up there on light volume, and then when institutions come in and sell, that's when you see the downward move. So again, you have to understand the cycle work here and the price pattern and time, and to watch for the volume, understand psychology. All stuff obviously we'll take you through in the webinar this Saturday as well. Anyways, as far as you know here, folks, and as far as we go, I'll go over the levels here into the end of this video. You have the 20 moving average. That's going to be resistance. Notice how you have not gotten above that, although you have tested it kind of in spirit of on these last two candles. That will be resistance, but not huge resistance anymore because you already tested it once and are pulling off. So if we go up again, then all of a sudden you start to look for the upside. In addition, see this green candle? 1, 2 inside bars. As long as these stay inside, this is a bullish, mini bullish consolidation pattern here with a possibility of upside. If you get below this yellow line, then it becomes bearish, and you look for a break of the lows or a possible double bottom move down, probably to 103 even number. But again, right now you have to take this until we come outside of this green candle as bullish consolidation, mini bullish consolidation. Again, a move through the 20 moving average. Where do we go? The dotted line right here at 104. You break through that. Where are you going to go? This next line. Notice how the consolidation happened perfectly on that line. Where's that line? 104.30. 104.30. If you get through that yellow line, 104.75, then the 50 moving average and these lines coming into play right around 105. Downside support. If you get through this 103.50 to 40 level, you're going to go to 103 even number. That will be a very important support level as well. Know your levels, guys. Look at the 60-minute. Beautiful downward move here. We are in the middle of this range here with good support on the 60-minute at 103 as well. So know your levels on the 60-minute because that will be key. The key today, what I'm seeing on this chart, is the fact we got through the 200. Now, one thing to look forward to tomorrow. Yes, it's a great down day. The markets have really come off their highs here at 108. This was 108 right up here. As you can see, right up here, you had to hit the 108, and look at that drop so far. But remember, and keep this in mind, nothing goes straight down, nothing goes straight up. Just because we've had some good downward move does not necessarily mean we'll continue to sell. Be aware of that. Tomorrow you have the unemployment number. Don't think that they're not putting the finishing touches on that to try and keep the market from really dumping out tomorrow, and understand that you could always get a bounce. Now, it doesn't mean we will get a bounce, but you have to be alert that nothing goes straight down, nothing goes straight up. Could we see some more downside? Absolutely. We'll go over that in the nightly video, whether or not there's going to be more downside tomorrow. I cannot give that information out to you guys in these free videos. You have to go sign up at the research center to really find that out, what we're expecting for tomorrow based on cycle analysis, price pattern, time, all the key psychology and volume indicators as well. Also, you can join the intraday stock chat. There's always a good way to come and talk to us. You can type questions to us. You can talk to us, obviously, through type. We answer you through the microphone. You hear us through the speakers, giving play-by-play, key market technical analysis all day long. We hope to have you join us real soon. Well, again, great sell-off, great confirmation of the big cycle that we've been calling for, folks, to the downside. We'll talk to you soon. Take care.